turn the tunes off. Let's see. We've got NQ here coming on a pretty wicked trend day. Bear market rally, maybe? Whoops, what did I do? Hold on. Let's bring that on back. My mistake. All right. So it is Wednesday, September 28th. I called it a day a little early. I'm not going to trade the close, but we can review it. Had a pretty good day. I shared my results earlier on Twitter, and we're going to go after the market closes. We're going to go through trade by trade, fill by fill, and I did not trade perfectly today. I'll be totally honest, but I've had some requests of show your fills and how do we know you actually took that trade? Whatever. It's like, oh, okay, I guess I'll share them if you guys really feel that's necessary. But hopefully it's beneficial too, because you can sort of see how even when you have a system that tells you when to go in and what your target is, that what you'll see is that executing that system it takes a lot of practice and a lot of determination and confidence, and I do not always execute it correctly. So you'll see a few missteps, but overall, if I had to pick a day to share, I think I traded a little bit better than usual. I've had a good couple of weeks here with just a few losing days spread out, but a lot of really strong days. Last week I had I only trade 3 days a week because I do work a full-time job, but out of the last couple weeks, I think the last since I came back from vacation, so it only been 3 weeks? I think it's 3 weeks in a row where I've 2 of the 3 days I've exceeded my daily profit goal in at least one account. I've got multiple accounts. I'm in the process of trying. I'm actually almost to my profit target for one of these Apex evaluations that I picked up on the 80% off sale they had for, what was it? It wasn't too long ago. Labor Day, whatever that was, in the beginning of the month. It's real close. So I might hit it tomorrow, but I don't want to knock on wood, I don't want to jinx it, but potentially hitting the target in at least one of the accounts this week. But if I don't do it this week, I should nail next week. It'd be nice if I could finish that within the first 30 days and I wouldn't have to pay the fee. But I mean, it's 50% off on all continued months with the code, so it's not that big of a deal if I slip a little bit, but I'd like to get it done. What we saw today, and again, this is the algo that I use. It is based on Simon's algo, which looks like this. I finally got these I forget what we're called, the POC shifts, the volume shifts. I've finally got these coded. I've got them colored differently. Simon uses squares inside the bars. I just color the bars. So hold on real quick. Let me just mute this. Okay. So yeah, I did finally color these bars just like they just look different than they do in the room. But the orange bars and the green bars are colored similarly to my algo. That's that way I can easily see them, but you can see this one here had an additional signal in mine that is missing out of here just because it's my own added thing that I'm using. Hold on real quick. Let me just mute this real quick. Okay. And yeah, we'll see where we're going. But anyway, this is my algo is the skeleton is Simon's algo from the room, and then I've just added some colors and a couple more lines that I use for primarily targeting. So mine's a little more busy, but you can see, for instance, and then of course the colors are different. But these red lines here are my primary targets, and they are based on these flags, which are the pivots up and down. So you can see the lower ones are green and upper ones are red. So if I wanted to short this, which I really don't But if I wanted to, right? My let's say I shorted this one. Oh, I guess I don't have a good target there. But if I shorted if this turned bearish and I shorted, my primary target would be breaking this swing low. And if I don't think we can get there, I'm not gonna short it. Right? That's so. For instance, here I didn't take this, and I wouldn't because even though it's set up, my nearest pivot is all the way down here. So I'd have to get through all of this just to break a pivot, and within that pivot there is a high volume node in here, right at the voodoo, basically right at that voodoo range level. Here, I'll show you. So this is the here. I'll just redo it. So what we do is we draw the volume profile of the wave. So you could do it down here too. Oh, I did it wrong. I did it wrong. This is why you should do it down here. Here, I'll show you how Simon teaches to do it. These are the cumulative volume waves. So if you start where it's green and end where it's green, that will make sure that you draw it correctly. And then he just marks the VPOC, which I think is great. I like marking the high volume node that's associated with that, because sometimes you get close to the VPOC but you don't quite get it. And this also highlights the fact that the VPOC is basically ticks from the voodoo range level. And so if you think about what that means is, as we came up here, most of the volume went off as we crossed that voodoo range level. Well, why would that be? Well, because I'll show you on the candlestick chart because it's more clear. The levels here at 11,521.75, you can see we had liquidity up here, stops basically. Here, I don't need these lines anymore. That was for this morning and last night. So, wow, two of them. Okay, so these highs, this one in particular, was sitting above the voodoo range level, and then they sold off from Monday, and then you can see they couldn't close even an hourly above it yesterday, right? And so when they finally went down and people shorted, it's very often the case that they will put their stops above it. So once we got through this high, which happened on this bar, we saw an increase in volume just as they broke through that voodoo range level. And like I said, that makes sense because it's been consistently being respected as resistance. Every time we find sellers there, we reject. So when we didn't find sellers there, well, sellers are going to give up, right? So where are we headed? Well, probably this voodoo range level, 11,625, which I might not even have on the chart because I don't know if I want that high when I set them up. Let me see. I have it. Okay. So this is where I'm expecting we're to go. Now, what I was saying was that what I was asking, like, should I short this, right? Well, the problem with shorting it is that everybody who was short just got like obliterated, right? And they began to cover here as we in this high volume node. Well, didn't begin, but like accelerated their cover, their buying as we broke through here. So the result of that means that this area on top up here, the low volume node right here, can become a new support if we break through it. See that? New support. This one didn't even reach it. But basically the problem is that all the volume was down here, and then as we went up, we had pockets. This pocket, these little pockets of low volume nodes on like a very micro time frame. Once they break over them, so sometimes they'll sneak underneath them with price, but you can see that volume is not getting underneath. See, this yellow line is the VPOCs. And see how as soon as we get into that area with the volume, they spike price back up again. Why? Because the way the market works, it's reactive, right? It's dynamic and reactive. So price gets unfair when it gets down here and people scoop it up. So should we be selling something where anytime it goes underneath a micro LVN, that the buyers just scoop it right up again. I'm not really a big fan of like selling things that people want to buy every time it goes down, even to the area where it was like not recently. Like if you think about what these low volume notes are, like price just rose here as people pulled their orders, their sell orders got pulled, and people as they bought, they got a little slippage, and we pushed uh, the market higher here too, right? These pink bars are a sign of like people pulling their orders on the DOM, and then price going up because of it. And so the market likes to fill those. You can think of them almost like single prints on a bigger time frame. The market wants to come back and confirm. Now, where will they go? Usually to the VPOC. So this little dash right here is the VPOC. So I can put a line on that pink bar, and you can see that if you're bullish, you can just buy there, right? Well, same here. If you're bullish, this is not the technique we use to buy, but if you want to trade momentum, like and we here you might need a bigger stop, but you can see that like as long as momentum exists, those are going to get relatively defended. Will you technically, you're not going to be able to put your stop behind it, but if they defend it, that's probably a good place to get long, because those spaces on the way up were not they didn't have a lot of volume yet. When we come back to them from above, if they defend them, that's a sign that even though they didn't have a lot of buyers there when we went up, that those buyers are still interested in that price. So it confirms the trend basically on this micro time frame, which is the 24 tick Renko. So I mean, if all you want to do is just ride a trend, like there's a lot of ways to do it. It's just that it's very difficult to manage risk that way, and you're not going to be right 60, 70, 80% of the time. Whereas like when you're using a mean reversion strategy, like I shared before, like you can realistically have like 80% win rates, and not like pretty good. Like I don't want to really show my account here, but this is, I mean, that's today. An 80.95 win rate is pretty good. You're not going to get that just like buying pullbacks. You'll be right a lot, but it won't be 80% of the time. But once you've identified that there's a clear trend and and if you've got a way to identify momentum, and for me that's this pink in the background. If that momentum's strong enough, as long as you can figure out like what areas they have to hold to confirm it, you can just buy off those levels. It's just that you also you need to have a way to know when that momentum's gone, because otherwise you're going to do it over and over again when the momentum's gone, and you're going to give back all your gains. So you have to have like a system, right? I will say it is harder to be consistent because it just doesn't do this very often. If that was your system, you'd sit here just kind of like watching most days, right? And like failing because you think that there's momentum and then there's not. But once you've confirmed that, okay, we're definitely in a trend day, we're like ripping through old resistance, and then they come back and they tag those areas, and bounce, like, yeah, you could easily scalp that pretty consistently. It's just that, like I said, when you're wrong, you got to stop doing it because it doesn't work very often. And so if it's not working anymore, yeah. Okay, so we get a sign here that we're probably a little bit exhausted. So if we get a bear bar here, or the next couple bars, we could actually short it. I said I was done. It's too late. My rules say I can't trade this late. We can do it on Sim, I guess. Do I have any of these accounts that are like gonna fail? Let me look. I don't think I do. Let me just check my balances. Yeah, they're all darn. Darn, they're all profitable. Like I don't really want to fuck with my, like, if I had one that was like ready to blow, I'd go ahead and trade it here, but I'm pretty distracted, and like I said, I had a good day. I don't want to like mess up my psychology. See, the thing is when you do things right, you don't want to end the day negative. So here, I'll show you what I would do. If this is an algo signal, if it's like a star down, I would take the short here because of this yellow arrow, which is my own signal. But especially when you have a yellow arrow followed by one pink background, and then if this is a bearish bar, if it's got an algo, a star or a diamond or something like that, but it's got to close bearish. I could take it. Let me just make this bigger. This is just the higher time frame, so I use it to help me figure out what phase the market we're in. I don't really trade off of this, but I am watching like to see if we're nearly closing a bar bullish or if we're like close to breaking a trend or whatever. But you can see this clearly looks bullish, but slightly extended. Okay, red outline is probably my weakest of the algos. It's my own idea, just indicating that there's a trap trader there that bought really high, but he's not necessarily there. So in other words, there are strong buyers in this bar, and they closed it at the lows. That's what the red outline says. Is that there's on the footprint you can see there's strong buyers who are aggressive, but they've closed it bearish. So they potentially trapped him. Now the better play is to actually get above that and then roll over. That's the highest odds trade. But the thing is when this is outlined red and then the very next bar is bullish, it actually usually runs. So like because I got this arrow, I'm pretty sure I could have sold this still. That star is not confirmed unless we close it bearish. You'll see it disappear if we close it bullish. Nothing will disappear once it's printed, but when the bar is live, you'll see it's basically just a hint. It's telling me to prepare for a star if we close bearish. But I know that because of the criteria that I can only have a yellow star here if we close bearish. So if it comes up here and closes bullish, what usually is going to happen is it gets another spike. And then again, if we're just not sure about what to do here, we can always draw the volume profile and, in my opinion, find the high volume node that's associated with that. And we could basically say, yeah, so see, it's gonna, see how the star disappeared? Like it never got confirmed, right? It didn't close bearish. So now if they trade like a tick or two higher and then get like a star or an orange bar, it's actually a pretty strong sell signal. Because usually when you get these red outlines getting beat, usually you get a boom. Usually a couple pink bars come after that. So if they rip this down and it's a yellow star here, it's actually a pretty good sell. For a scalp. Alright, fuck, I totally want to take this. So it's at the end of the day, it's not a good idea for me to do that. Because like I said, the problem is not that I don't think it's going to work. It's that if it doesn't work, I'm going to psych myself out of doing well all day by like giving back $300 at the end of the day, which I really don't want to do. Now, if they don't close it bearish, or if there's no algo signal when it closes bearish, there's just nothing to do. I'm definitely not going to buy it over here. Okay, so now see that's a warning that if it goes higher, it's actually going to get a triangle. This would make sense. Triangle with pink bar higher would make a ton of sense here after beating this red bar. Because like I said, there was an aggressive buyer up here. They closed it lower and just like ripped higher. So like they didn't even care, right? Buyers just kept buying even though there was someone trapped at the highs, like an aggressive trader at the highs. So yeah, it's a clear sign that sellers have no interest in this market whatsoever, and the only ones selling are profit takers, because even when they trap a buyer, they don't even get any follow through, right? And really, actually, we shouldn't be shorting. I was actually wrong about that sell, because the POC is here underneath it. We really don't want to be selling into that POC, because if I saw it bounce off that POC, it's actually it's not a good place to be a seller. So I was wrong. If it would, even if it would have given me a bear here, that setup is technically a short. But when you have the POC to the high of the day underneath you, I don't trust these like B plus setups. I would only fight a trend day with an absolute monster of a setup. And to get that, what I basically need to do is establish volume down here, come back up and bounce off that. But now we're making new highs, so now this doesn't even apply. If we, assuming that, yeah, see, now it's got to be stretched. So what we need them to put in a bunch of volume at the high, and then roll it over, and then retest it. That's how we would get short. So see how the volume shifted, right? This was a volume node, now we have another volume node up there. So we just scoot this up. So now we need sellers to show up below this, aggressive sellers, before we consider shorting. And it probably does just keep going up after beating this red outline bar. I don't have a buy signal here to buy when they rip up, but I see this all the time, so maybe it's something to look into. When these red bars get beat immediately, like I said, you usually see multiple pink bars. So So, could you get 8 to 10 points after that? I mean, we can see. Like, here's another one, right? Red outline followed by a bullish bar. Voop. Happens a lot when it's trending. So I'll have to look at that. That might be an easier way to buy it. It's kind of, it's not the way I'm supposed to trade though. It's like a breakout, It shouldn't work very often. But there's my 2 pink bars. This is what I expected after seeing this. We did not stretch this the right. We got to do this again. They need volume at the highs for us to get in. See how much space there is? So sellers can push this market down to here, and then buyers can just lift it again because they actually have high volume in here. So see, that's actually a good sell signal, but it's probably not going to go further than this on the first try if I had to guess. But pink bar, orange bar is actually a pretty strong sell signal. You can see here, there's just like this void, and they're trying to attack under that void. But look, there's all this volume in here. Look at all this volume here. They're going to defend that volume. That's all I'm saying. The buyers bought in here and continued to buy, which is what the triangles are. Like there's an aggressive buyer here. They continued to buy higher, and then sellers pulled their orders. That's the way to interpret this. You don't need to know how to do that. You don't need to know how to do that to trade it. You can just wait for the setup, but that is what it's telling us. And so what I said about this arrow is that very often it's a sign of exhaustion, like we've just kind of gone too far with the trend when it shows up on an up bar. And usually the next algo signal, which would technically be here, but if you use my algo signals, it would be this one, which just is not as strong. But this is the first of Simon's algo signals. What I found is usually the very next algo signal is actually a pretty good sell. But like I said, I'm not going to sell it when I know that there's so much buy volume here, because I don't have very good risk reward if I was targeting this area. But that is probably what's going to happen. It's going to come to the pink line, and like I said, I don't have risk reward. Plus, it's the last 10 minutes of the day. But I wouldn't be shocked if they try to pull this down. Usually on trend days like this, we close near the highs. So the most rare situation is where we actually reverse it all in the last 10 minutes or whatever. Everyone wants that big dump, but it very, very, very rarely happens. See how the voodoo range level was right here? And we close the bar below it on the Renko chart, right, with the triangle. So what we're seeing here is a rejection of that level. So if they can close this candle, this like 30-minute or 1-hour candle underneath it, that could mean that we need a bit of a pullback, like probably like a 70-point pullback on NQ and like a 19-20 point pullback on ES. But if they just rip higher, then that's not the case. These Renko bars are just not significant enough to influence the 30-minute chart. This is just telling you where price and volume is. Like it's a snapshot of the current market at a very, very small time frame. So now they got triangle down and then potentially followed by up bar, which is usually pretty bullish, but they'd have to close it up here. I would not be surprised if we close at the highs. They could squeeze with more pink bars up here. They could always put in more. See how there's this tiny little low volume node here, and they bounced off it, or they're trying to? That's really bullish. They couldn't even get to the high volume node, if you think about it that way. Right? They got through this low volume node, low volume area, couldn't get past this. And yeah, this is going to spike. I kind of feel bad for the shorts who've been like attacking every one of these signals, nobody in our room, but like if you were committed to shorting everything, and like we're looking at the footprint for signs of aggression, like you'd see the same things here. Wow, they absorbed the sellers. That's what that green bar says. So there's no volume down here now. Anybody interested in this is willing to attack this at the highs of the bar, and they tried to push it down, and they just ran into like limit buys. So yeah, this is not the end. I'd be very surprised. Now, if they can get under this, right, now this can become resistance, but good luck getting under that. You're going to need some new participant to come in with aggression to beat all this. Because what they're basically saying is, like, I don't know if they're bluffing or not, but they're saying they have a huge hand. Buyers are saying they have a huge hand in their pocket, right? Because they're putting in these high aggression bars at highs. See that? Like they broke out with a star. They're trying to break out with green bars. Like they're showing aggression at the highs. It is interesting that we did put in a triangle here. Now, like I said, if they can beat this, these guys getting trapped is a problem for bulls. But this is a sign that they do not have any interest in giving up. And so what usually happens is sellers just give up here. Wow. So green bar followed by star is aggressive to the short side. Like I said, I'm just surprised that sellers are actually trying to kill this up here. I don't know if they're just kamikaze, or if this is just a little bit of profit taking at the end of the day that's just going to get ripped through, because that's not what I expected. That's an aggressive buyer that got met by an aggressive seller. So they called their bluff, basically, potentially. I don't know if it's a bluff, but they called them on the river or whatever, if you want to think of poker analogies. Okay, so now they're back into this high volume node, but note these are all purple bars. So, like, it's going down, but mostly because buyers just pulling big orders. So maybe this was a little bit of a bluff, and there might have been some spoofers here. But now when they get into the high volume node, this is where it actually matters, because they would need to establish volume below this, and then reject it from below to have any confirmation that these guys are actually trapped. But they did put themselves out there, you know. It was dangerous to do that, just like this guy did. But you can see when this guy did, they just let him go. And they're trying to trap this guy. But look, they gotta close this. Okay, so now have they put a VPOC below the low? Oh nope, it's on the low. So that's not good enough. He's not trapped yet. They need another bear bar. They need to get to 76.75. They're not gonna do it. Speed bar up. Watch if this is pink with a white diamond, it's a buy. I don't know if it's gonna get the white diamond or not. It would have to finish really fast. I don't think it will. No, it would have to close with a white diamond for me to be even relatively interested in this. Oh, they failed. They're not going to do it. Wow. So another aggressive... Did you see how the aggressive seller came in and the star showed up? It's kind of how that works. Or it could disappear if they defend it, because then on the footprint it just, you know, that same price point just doesn't look all that impressive. But at the time being, someone just like threw a big, like some big aggression on the sell side. So let's see if they follow through here. One aggressive trader does not break a market. You need follow through. They are trying to get underneath this this high volume node. Look at that. So the buyers pulled their orders after this aggressive trader came in, and they're trying to put an aggressive trader now here. Will buyers defend? Notice the volume is way up here, inside of the high volume node. They've not actually gotten the VPOCs of the bars below this high volume area. So they could trap sellers here. Oh, look, see how the star disappeared at the last minute? So now the star's not coming back. So buyers were able to come back up and defend that price point. Chances are this probably gets trapped, because it looked like it was going to get a star, but it did not meet the criteria. See, they're trying again. They are trying again. Wow. So buyers defended this, and they are trying to do it again. Let's see if they get a star on the bottom now. Now the volume would be below the VPOC. This would be a sign of weakness here. And again, the location makes sense. It's right at the voodoo range level. Oh, look at they keep defending those, right? The stars keep disappearing because the buyers aren't giving. They're not letting them take that price point with absolute aggression. That's really interesting. So they looked like they were going to push it with aggression, and buyers defended it and almost trapped him, and then they aggressively sold it again, and buyers defended it but let go, right? So they're just grinding lower. They're bleeding all the aggressions at the highs. But now we are clearly developing volume below the VPOC. So if this comes back up and rejects off that high volume area, it's probably going lower. Buyers need to retake this right now. Oh, they only have a minute until the close. Wow. What? That is not what I expected. When I saw this guy come in, I thought they were just going to cream him. just run right through the highs. But sellers like hit here and then took them back to the backyard, to the woodshed, and just bled them out. Look at that. He got absolutely trapped. So these guys are definitely trapped now. So what you can do is you can draw this guy, this bar here. There are definitely buyers trapped there. So if we can get price back into this area and you see sellers aggressively defend it, that's actually a really reliable sell now. And like I said, it looked super bullish all the way up here until this guy got trapped, and then they didn't defend the high volume node. So this is a huge change in character at the end of the day. It does not mean that we're going to give back the whole move, okay? Keep that in mind. Like, buyers can still show up here, right? If the sellers don't defend this, it doesn't matter that they got volume down here. They'd have to do it all over again. So here's an aggressive buyer at the close. That's interesting. Is he just going to get immediately swept? So that's the first sign of true momentum here. The purple in the background is seller momentum coming in if they continue here in the face of aggression. Or will buyers get continuation with the triangle? Let's see. I'm guessing if they do, that the momentum will not be validated. But if they close it down here, supposedly, it looks like they're going to have some momentum. But usually, we do get the entry up here. Not always. Sometimes they just V it down. But usually, it does eventually come back up here. We're not going to watch it post-market for very long. This is going to turn into Globex, and it'll just pause here. But that is for buyers to lose that high volume node or high volume area at the top, especially if you look at ES. On ES, they had these single prints up here, and they couldn't close them. See that? Here, up to here. They here. It's like basically this voodoo range level up here. They could not finish the job here yet. So you'd think the buyers are not done, right? On ES, it looks like they're just not finished, if you ask me. But on NQ, and I didn't think they were done on NQ either, and maybe they're not, right? But they did run into resistance here in the same spot as they ran into resistance, whatever day this was, Wednesday or whatever, Wednesday, Thursday, Friday, Monday, Tuesday. Nope, it's Thursday. So Thursday they had this big wick here, and then they ran into resistance at the voodoo range level. Well, we've now run into resistance in the exact same spot. So these same sellers are probably attacking this. But surprisingly, they got them to close below this. And that's what I did not expect this close to go below this key level here, 11,557. I did not think they'd get that close, but when they did, you have to respect the fact that these pushes up are probably now going to get defended by sellers. So that's how I would interpret that close. It was a really bullish day. They trapped sellers at the lows overnight, and then just pressed all the way, collected all the liquidity from wherever they put their stops over yesterday's highs. But that close was brutal. Even though it doesn't look like very much, that's not what buyers wanted to see if they expected continuation here. Yeah, look, this aggressive buyer came in, and they're just going to continue the momentum lower, which means we're not going to get an entry, unfortunately, most likely, unless they could be trapping this guy. So see, if you did sell this, it was, like I said, it was technically a sell signal after this arrow, followed by the orange bar. That is a sell signal. I did not take it. It's a sell signal that I've seen work repeatedly. If I had taken it, my primary objective was to get through this pink line, and my secondary objective would be to get through this green line. So had it not been the end of the day, I would be taking profit on that short, right? And the bell there is to remind me that we are pushing significantly below these channels, all these lines that are like the ATR channels, and that if I'm basically, that either there's seller momentum coming into the market, and so if I'm long, I certainly don't want to be holding long, but it also means if I'm short, I should probably be taking profits, because the potential for a retracement is likely here. So it's like I really shouldn't be long when that bell hits. But if I'm short, it's a good time to take profits. Let's put it that way. Like, because it means that if we're in balance, I can start to look for longs now. But it's basically a sign that, like, whatever that trend up was doing, has pretty much finished, right? And now we're in some sort of a balanced state, or we're getting bearish, one or the other. Um, that's what the bell means. But it's interesting that they did trap underneath this low, and now they're trying to bounce back. If they got a star here, it'd be purple bar, white star, and that'd be a good way to lift back up to this high volume node. Kind of curious if they're able to pull it off. This would be a trade I would normally, if they do that and push this to the high and get a green bar or a star up, that would be typically an A+ setup for me, long, to get back. And again, it's just to get back up to, it's just a scalp to get back up to the top of this channel, which is right here, right at this high volume node. This grayed out area. Let's see if they get the algo. They have to close it and get like a star or a green bar or something. They need someone aggressive to come in here. I can't tell. There's no warning that it's happened, but oftentimes it happens right as they close. Like someone just comes in and just like crushes the sellers, but they also might just not close it bullish, in which case there's definitely no reason to buy. Because if there's no, I'm only going to follow aggressive traders back in. I'm not going to be the aggressor. Wow. So more volume down here underneath this low. See how they're coming back and testing that again? That's not what you want to see if you were hoping to see this retrace all the way to the highs. You don't want to see them return and put more volume into lows, by the way. And like I said, that close was not what buyers wanted to see. If you were like swing trading and you bought at the end of the day, you did not want to see that close. And you'd want to see them immediately reject lower prices, because on a higher time frame over here, you can see that it's clearly still bullish, right? But notice we got the arrow here, and the pink in the background where there's momentum has dried up, right? So most likely we're going to go into some sort of a sideways period here. Doesn't mean we can't eventually resolve higher, but there's a good reason to think that some of the mean reversion trades that the strategies we normally take are actually working. Will start to work again. All right, so let's do. This isn't going to move fast enough because we've already seen the close, but let's go back and do the review, and we'll go. Like I said, I had a request to go like fill by fill to see like what I was doing and why. And while all my trades aren't perfect, I will show you where I made mistakes as well. So these are the fills I'm working off of. I shared them on Twitter if you want to follow along. This is in order by time. So the very first fill is a short when I was at break even, which didn't work. So let's go back to London, because some of this is from this morning. So here, I'll just do it on the higher time frame. It's faster. And so we'll go back to the close. Here, I'm going to erase. Let's erase all the lines and everything so I can't cheat. Okay. And then we're going to go back to Wednesday's close. Okay. So this is Wednesday's. Oh, this is Wednesday overnight. Wednesday close. Now, the tricky part is that these are in Pacific time, and the algo is in Central time because it's in Simon's time. So since it's based on his algo, and we'll do this on both, so you guys can get a feel for what you could have seen in Simon's room without my additions compared to where mine actually helped me. Oops, I went too far. No, I didn't. Today is Wednesday, so his looks a little different than mine. Okay, so there's midnight. 17 my time is 19 his time. Okay, so my first short is somewhere in here. So 17, no, I'm sorry, 23. So it's like 2 a.m. Okay, so that's the first short. All right, so let's do it. I'm going to show you on mine because that's where I actually traded it. But what you'll see is most of these are going to show up on Simon's too, because a lot of mine, my colors and lines and all this stuff is just for confirmation, as well as just their new ideas, like parts of a future signal, Whereas like I'm not totally sure how I want to build it yet, but I know that I want these parts of it. So for instance, like something to do with these arrows and something to do with these background colors are probably going to eventually become a pattern that I will identify with a new signal. And once I do that, I can actually remove those signals. So it's not so crowded. But for now, to figure out what the best, like the optimal signal is or pattern of signals is, I'm gonna need to watch it for a while. I've got some ideas, but I haven't forward tested them. So that's kind of what I'm doing now is to see, like, I know they work when I back test them, but I don't know if they continue to work in multiple different market environments, and I don't know which markets environments they work the best in. So, and I'm not gonna like take the time to code them and optimize them now when I don't know when they work best. So just realize that that's why there's all these extra lines on my chart. It's not because you need those, as you'll see, but they do give me some extra confirmation because I've got some novel ideas with how to utilize them. So what we're looking for here is Tuesday, and I said Wednesday at 2 in the morning. So Tuesday night we got the Apple news here. We got a nice reversal. You can see that there was bullish momentum, the pink, all throughout here, and we had a similar signal as we got this afternoon at the close, where it went up, 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 and then start getting orange bars. If you would have measured this DVP, I was not trading at this time. I was not at my desk, but if you would have measured this, the high volume node is down here. So your trade choices are short, targeting this, right, and getting out there at the voodoo range level, that dash, 11,364.75. It's very common to see the high volume nodes coincide with voodoo range levels. Like if you haven't seen that, like just trust me for now. That's just how it ends up working, especially by the end of the week. But anyway, that would be trade number one, and then trade number two would be a rejection from below that then goes that with the intention of taking it lower, right? So you'd have to develop volume below it, which happens here. See, this is the high volume node, so we have to get the yellow line below that, which happens here, and then we have to come up, contact the pink line, but reject. So you might have taken it here, and that would have stopped, but this one clearly is a short. And the diamonds there, they're my own interpretation of a speed bar. They're not the ideal. They're not the A+ setup that Simon teaches, which is the orange bars and the stars for the entries. So that you can see that the like the B+ setup, the speed bar, doesn't really work, but the A+ setup does. And I just missed it. I just wasn't here. That works beautifully. The orange bars the orange and green bars are really powerful. And so are the stars. But knowing which direction to take and which ones to ignore and which ones to take can improve your win rate significantly. But I did not take that. So my first trade, like I said, was 23:07 Pacific. So that is 2 a.m., right? Or no, 1 a.m.? 1 a.m. Central Time. 1 a.m. So 1:07. So we got this big drop down, and then you can see that we ran out of bear momentum. There's no more purple. See how there was purple here? Bear momentum, bear momentum. You don't want to fight that, in my opinion. Once there's no more bear momentum, now I can start taking mean reversion trades again as long as I get rotations in the market. Well, I wasn't trading here, but I shouldn't have been anyway because there's no rotations here. So you're going to see, why do I still have lines on here? So you're going to see a lot of, I don't know where those are from, you guys. Sorry, let me try this chart. I really don't want to have lines on. There we go. Okay, sometimes I trade from, or watch the 32 tick as well. So you don't, the way this works is you're going to get these signals in this choppy environment, especially when price is staying between these shaded lines, which is a tighter channel than the channel that, so the blue ones on mine are the same as the orange and the blue on Simon's. I also have added the midpoint here, the gray is the midpoint of that channel, and I find that very helpful. But in addition to his channel, I've added an additional channel that I'm testing out this gray and orange here, the shaded areas. And what I'm primarily using it for is for targeting, as well as for determining what phase the market we're in. And you can see when those shaded areas get stuck inside of this blue channel, you get really choppy balanced action. Whereas when one of them's outside, or even more when both of them are outside, you can get like bigger directional moves. So you can see that that condition started here, right? You got outside of the blue there, and on the upside, it was doing it until, I guess that was a while ago. Well, whatever. It didn't make, see, this is all balance. Balance. It can't get above it here. See how it tries to get bullish, but that shaded area can't get above the blue line. And then right here, it clearly starts dropping, right? And so if I'm bullish here and I see that, or if it was above and it breaks back below, I'm treating it the same as like seeing this pink go away, right? It's a sign that we're at least getting balanced, if not bearish. And then once it goes underneath the channel, I'm not trading mean reversion, right? So now as this drops, I'm not trading mean reversion. I'm not buying this. I'm not buying this, right? And if I did, the target would be back to the shaded area. So the reason I'm not buying this is because naturally you're just going to get back to this higher end of this shaded area. And there's just no risk reward there, right? Because the way I was doing it is I was targeting the blue line, but I would get so many of these that I'm like, why am I missing? Like, this is so far away from the blue line. Why is it not making it back before it stops me out? And I identified that part of it was the, what happened here? Part of it was it just wasn't giving me enough. It wasn't, it was too conservative of a channel, right? So see how it kind of gets stuck here before it gets to the blue? What happened to my fills? Hold on, I lost my... Okay, I got it. I was gonna say, I must not have moved it just disappeared. So, wow, it keeps disappearing. That's really weird. This should be a file I can continually look at. And for some reason I'm losing it. Okay, very strange. It's a PNG file. I don't know why it keeps disappearing on my computer. Weird. Okay, so 2307, so 107 is what I'm looking for. Let's get a move on here. But anyway, what I was going to show is once you get over this, see how it can't get over it, can't get volume over it. Right here, it gets volume back over this here, this shaded area. So I might miss this one, right? But now I know for sure we're not bearish anymore, right? We're at least balanced. And so now I can start looking for traps. And an example of a trap would be is if we get past this red line or past this green line, like right here is a trap. We got this green line in, we test it, and we go higher. Right, so that is a trap, and that's the kind of thing that I'm trading all day. And then this, right, broke a red line, came back at it with an algo short, right, broke a green line, came back at it with an algo long, right. That's what I'm literally doing all day, most of the day. And then every once in a while I'll catch a big one, but mostly I'm getting those for 10 to 15 points is what you'll see. Now, like I said, I was not trading earlier in the day. Earlier in the Goldbeck session, so I missed those. And then when I sat down, it was 1 o'clock in the morning Central Time, which is here, right here, right? So I'm looking at this. I missed this move, and I missed this move, but I see that they set up, right? I didn't catch this long. I didn't catch this short, and then I sat down to trade like right here, right? So DAX opened and they started buying off that low, and it was right at the voodoo range level, and I was already feeling myself getting frustrated is what my journal says, is that missing this was frustrating because I literally sat down it was minutes after this, and so I just missed this big move, and I was like, God, like, why is my timing so bad? I almost missed DAX, right? Like I'm not focused enough. If I'm going to trade, I should get here before DAX. Whatever. I ended up like not thinking about this as like a bullish move, but just thinking I've got to start trading these traps because they're working, right? So what I ended up doing was I shorted average fill price 11,264. Right there. Here, well, let me do it with the one that actually gives me a 11 264. Right there is where my fill was, right? And the time, do I have the time on the vertical line? No. I should. The time was, we would say 107. So, yeah. So the time was 107. So in here. Okay. And then, now why does it say that my P&L went down before it went up when I covered 6 of these? That's weird. It says my P&L went down, but I covered it at 11,255. So I'm not totally sure why that would give me negative P&L, because then once I closed it out, it shows the P&L correct. So I'm actually not totally sure. Oh, open profit or loss. So maybe that's because it came back on me. I'm actually not sure. Open profit or loss. Weird. All right. Well, one way or another, the trade is I got over this flag, right? This power bar, and then we came back in with an algo signal, right? So my entry is here. I enter one tick with a stop order usually below this close. So they close and then they got me in on this bar here. And then my stop goes above this, right? So my exits on this were 55, 51, and 46. So 55. Okay, so those are going to be my exits. And it was a profitable trade. I don't know why it has a negative number to begin with. I know where I took a loss if it wasn't here. Anyway, so here's the first fill, right? So I usually take profits anywhere between 9 and 12 points, and that's gonna do it for my first exit. And in this case, I took 3 micros. Sorry, eight my sell was with 8 micros, and I took them in chunks of 3, 3, and then runners, which were 2 left, right? So basically the way I think about it is I have a core of 6, and then 2 of those 8 can be runners, and I want my core to get off to be totally out between a profit of 9 to 15 points, usually 9 to 12 is my average. So to make that happen, what I generally do is I will set this one, the 51, as a limit order to just, take me out of at least 3 right when we hit 14, 15 points here. And that is a bracket order, right? So once this one gets hit, my stop goes on that, the stop and the target are like bracket orders, right? So one or the other gets filled, and then the other one gets canceled. So if you ever hear me trade and you hear the voice that says order canceled, right? It's canceling the stop. But if you listen really closely, there's like a little bell that rings, and that's actually the limit order getting hit. So the limit order gets hit, the sell gets canceled, right? But the first order here is going to depend on where the point of control was on the previous here. So if you draw this is the wave, right, to the high. And so if the wave to the high gives me a POC or a high volume node anywhere in the area of my sell, I'm gonna try to exit on any any reason, like any sign of buying, if it happens after touching a high volume node. So the way this works is I'm drawing this, and then you can see before I even get there, I can see this here, right? Once I get the triangle down, right here, before, like so I'm into the trade, right? And as soon as I get this next bar, and it's got a triangle on it, I can now draw this volume profile manually. And I'm noting I got in here, so about 10 points from 64 is 54. And so I'm looking here and I'm saying, is there a POC or a high volume node in this area, right? And I would say, yes, that high volume node is right here. Is it the POC of the wave? No, that's way down here. But it's a high volume node, right? And above it is a low volume area, all right? Or else you can have the other way around, high volume area and a low volume node. One way or another, it's an area where somebody got long, and it's usually a VPOC of one of the bars coming up. That's a hint. If you've got the algo, you'll see that the dash, the VPOC dash, if you don't want to draw it, just like, here, I'll show you. So if you didn't draw this, oops, that's going to erase everything. I only want to erase this one. If you got in and you didn't draw this, and you got in right here, I would say, okay, where's 64? 64 is interacted by these 3 bars, right? It breaks, actually not this one, these 2. So my choices for a decent target where I might expect buyers to show up is here or here. That is the easiest way to find a target if you're using the algo. When it comes to taking profits on your very first target, find the VPOC of the bar that interacts with the area that you want to be getting out, 10 to 15 points. Well, this one is like this one is too close to my entry. See that? It's only like 4 or 5 points. So I'm going to ignore that one. That's going to be the hardest part to push through. And once it does, I'm going to expect that this one gets touched. But once this one gets touched, if they reject off of it, I'm usually taking a third off, or maybe even a fourth quarter off, right? So you'll see what happened is I didn't actually cover there. I covered on that bar when they bounced off of this white line, and it looks like a wick here, right? As it's coming up, I'm marketing out, and I got filled at 55, right? So I'm like watching this very closely with my finger on the trigger, and as soon as I see this one hit, my choices are leave a limit order there and just get out, or if they don't immediately drop further, which is usually the case, they start to bounce, just out 1 quarter, right? And then, like I said, I still have the limit order to exit another quarter or third or whatever, depending on whatever I'm trading, right? If I'm only trading two like minis, I'll leave the 51 limit, and then if I see this occur, I'll get the other one out here. And so I would be totally out at 51. But that's a good trade, even though it gets further, right? If I've only got 1 mini, I'm just out everything at 51. But if I got more than 2 contracts, I've got the limit order at 51. I'm assuming I'm gonna hold at least 1 runner, and then I'm gonna like get out of the other quarter or the other third, I guess, if it's 3. I'm going to get out of that on basically the first sign of weakness after touching whatever VPOC is in this the VPOC of the bar that is in my target zone, which, like I said, is between 9 and 15 points. So that's this one. You can see that this would have also worked here, right? I could have waited for that one if I was a little bit more bearish, but it's on the heavy side, right? It's more towards the 15 points than towards the 9. So I'm generally gonna go more towards like 10 to 12. If there's a VPOC between 10 and 12 points from my entry on an up bar when I'm selling, I'm gonna target that, right? So anyway, I take the runners here, and again, why do I take the runners there? Primarily not because like there's any sign of aggression, but because I've got this shaded area, and if I think it's balanced, It doesn't mean it's not going to go any further, but it will usually hit this when it's balanced, right? Now, if it's bearish and it just like dumps, I do miss out on that by getting out early, right? And so I don't think it's wrong to hold those runners as long as you can. I got out of those at 23.17, so it was right at this. I did like get out of them here, probably because I also saw that this support here was coming. See that? And I believe what happened is they came down here, they started to push into it, and then they bounced just a little bit. And so and then I think they came back down again. See that little wick? And so it looked like they were trying to hold this. And so I might have just kind of thought, hey, I'm in my target zone. Let's just take it. Because the next real target after that gray zone, orange zone, is this green line. And I did not have confidence that we were going to go that far. I actually don't remember how far I went. My next, and so I was out of the trade at that point. And the trade went one more bar and then bounced. My next entry was not until 7, so 5 a.m. Is that right? 7:59, so 8, 6 a.m. Okay, so I don't have another sell in this session. So they tried to save it here, but you can see that this is a purple bar, green bar, and it's in the right location. It's on the blue line. It's in the bottom quartile, right, of this channel. And if you're balanced, this is a good trade. It's like a B plus to A grade trade. But when I'm doing these Apex prop account things, I'm only taking like the very, very, very best of my setups. The AA plus setups is the only ones I'm taking. So even though this is a good setup, right? It's not good enough. Oh, I wanted to show you on Simon's. So on Simon's, okay, so here's the end. Like I said, it's exactly the same setup. Here's the apex. We traded over the apex, came back in, trapped back in with an algo. So the entry is here, right? Technically one tick below that. And then you can see on his, just like on mine, if the entry is there, this one's got the line, right? Then I want a target around here, and the VPOC with the nearby target, or the bar with the nearby VPOC is that. So that's where I want to get out of my trade, the primary part of my trade. And then you can see that as we went down, it flushed to the lower channel on his and then bounced. So if you were just looking at Simon's and you were targeting the blue line, you did better than me, right? My extra lines ended up having me miss out on this. But there's sometimes it doesn't actually make it down there, and then it bounces, and so I'm getting out just a little bit earlier. You could use the purple and you'll see that that's pretty much the same as what I'm doing. The purple's right here, right? And so if they would have bounced here, you'd end up trailing out. Now the funny thing is had I just held these as runners, right, and didn't get out on a target, I would be trailing out almost in the exact same spot, right? So there may not be a huge benefit to getting out early, because had I just held them, I could have held them as long as I wanted, you know? So let's mean 18 point stop. Correct. That's a good question. My stops are typically about 15 points, and I get a win rate. I only trade the A plus setups, so I don't need a 1-to-1 risk reward ratio, because my win rate is high. My good days are in the 70s, and my average days are about 66%. If I have a win rate under 50%, I will often have a losing day. That is true. So if you're taking a ton of setups and you want to be like constantly in the market, you're going to need to hold those trades longer. And like I said, I would rather be paid when I'm right, because I'm fine, like as long as I take the high odd setups and I get paid something for them, um, I'm cool with taking an occasional stop because I know they work pretty often. But here, your stop in this case had to be above this. So 82. So this one was about 18 points. But for me, it does it. So technically, so Simon's rules. It's a good question, Karam. He says the trap back end doesn't need to have an algo. Simon's rules say that the trap back end does not need an algo. If, and again, these things change depending on market conditions, but his rules are you don't have to have an algo if either the apex that you're trapping back into or the actual bar that you're trapping, your entry, if there's a pink bar 2 bars from either your entry or from the apex. So this one did not have a pink bar here. This one had a pink bar here. So as long as you've got that pink bar up there, then the trap back in technically does not need an algo. Technically. It will work often enough even when it doesn't have an algo, particularly when it is above the orange line, right? So it's way up here and it's like engulfing this bar, and this bar is an algo, or is a pink bar, or the pink bar is back here and you're trapping back into that bar, right? Then it's fine, according to Simon. The way I do it is I want the algo to fire. And that means I miss some trades, right? But I'm okay with it being one of my algos. So, you're in the room, so if you want any of these additional signals, tell me, and I can share it with you. It'll work if you, you don't have the algo on your desktop yet. Once you have the algo on your desktop, you're welcome. I'm happy to share these with you, or if you just want like one of them, I can show you how to build it. But let me find one that is one of mine. Looking for most of the traps will have an algo, but sometimes they don't. Okay, here, this one. So this is a good example. This is a power bar. It trapped back in, and on Simon's there'd be no algo here, right? But there's a purple bar here, making this a pretty good trap. Oh, good. Yeah, you'll appreciate it having on your desktop. It made a huge difference for me because I could actually backtest it. My confidence exploded as soon as I just did some work on it. But see how there's no purple bar here, right? But there's a purple bar here. So once you've gotten over that purple bar, especially when there's no other purple bars in this wave, by the way, that really helps. If the only purple bars are at the bottom of the wave or the pink bars are at the top of the wave like this, the rest of this wave is actually very easy to move through. The hard part to move through are the purple and pink bars. The range of the pink and purple bars are the hard part to move through. So once you've gotten beyond that, here and here, it's much easier to take out that low or that high. Much easier. I hope that makes sense. The purple bars and the pink bars tend to create resistance to the right. But what I was trying to make a point here is that you would not have gotten an algo for Simon here, and Simon would just say, just take the trade because it's a trap with a purple bar. My brain is not good at taking trades when there's not a signal. Like, I know I'm supposed to do it, but it's really hard for me. So I just figured out other ways to identify aggression, but I can only take them when there's a trap, right? So for me, these blue diamonds and like the green outlines and the blue arrows, like they're kind of similar to Simon's, but they're my own ideas. But they're simply things that I see on the footprint that I identify as aggression. And I'm not going to take them by themselves, but when they set up like this with a trap, I'm confidently taking that. And then there's a couple of situations where they work really well, but particularly the traps. And that way I actually have a signal when I have those traps that normally I wouldn't take on accident, right? Where I should be taking them, but I don't see the algo and it throws me off. But of course here, like I said, on Simon's, you absolutely had the algo signal. There's really no reason not to take this. And it was even above the channel, which makes it better because your stop is pretty safe. I will say one thing that I talked to another member, Bill, about. Bill did some back testing on using on NQ using a 15-point stop, even if it's not the top of the bar, with the intention of coming back into the trade if it stops you out and then comes right back in. And his back testing actually showed better results than putting your stop one point behind the bar if you're planning on coming back in anyway, right? So if your intention is, if I get stopped out here and they roll back over and they give me another entry, I'm just going to take it again anyway. What Bill has decided, and again, like, everybody in the room has their own way of looking at things. Simon is very careful about not confusing people. So if this confuses you, just ignore it, right? But what Bill has found in his own trading, right, his style is extremely different than Simon's, almost opposite, right? Bill waits for the very best setup all day and takes like 3 trades a day. Simon like takes all of them and then shares like a third of the ones he takes when he thinks they're going to work really well. But he's trading a ton more than what he's actually sharing. So yeah, the rule that Bill has, and I agree with him, is that you have to decide how many times you're willing to come back and trade again in that same area before you take the first trade. So before you even, when you're even thinking like, oh, I could take a short here, and it looks like this, you need to decide, like, is this an area I would take this twice, 1 time, 3 times? Because otherwise you're going to get tilted, right? When it happens over and over and over again. So my rule is I can take the trade twice. Yeah. I can take the trade twice, but I can't take the trade a third time unless I have a location that I am confident with. But if I take a third stop, I have to actually be done. Like I have to take a break. Like I have to step away from the computer because 3 stops in a row shouldn't happen with this system unless you're trading during conditions that aren't very good for the system or you're not trading on process. So I have to take a break and like journal and like kind of start my day over to make sure that I'm back on process, because taking three stops in a row is pretty painful. It rarely happens, but the reason for that is because I will rarely allow myself to take the same trade 3 times, right? So generally my rule is I will take two trades in an area. And so I would say if I took this short, and that worked, and then I took this short and it failed, I can only take 2 stops, in an area, 2 stops. So this one worked. This is the same area, and I took it. And if this one would have failed, I would only have 1 more shot at this area. Before I'd have to stop trading it, right? And then what I have to do, like I can find a spot where this happens here. I'll show you. I know exactly where this happens. It's when you have really, really choppy sideways markets or a one-directional market you're trying to fight. So, and they happen in Globex all the time because I trade a lot of Globex and it's a pain in the ass. So this is good trading for us. This is what we want to see. This is good trading. Here, let me erase the lines. It's getting confusing. This is what you want. This is hard trading, right? This is tough. So if you see this first and you're like, oh, this is working great, and then you're like, I'm taking longs, and here's a trap back in, right? We had a purple bar, two from the apex, and then we trap back in. There's no algo here, but it's a great trade, right? There's no algo on mine. I showed it, but this is that same exact trade, and I would miss this with Simon's. Without my added algos, I would miss this. And then get tilted when this happened. But then I'm like, okay, cool, this is a great area. I'm gonna see if it sets up again. And so then I might take this, right? And then that one works. And I'm like, oh sweet, I've got the right direction, everything's cool. And then if it's set up again, like maybe here, I don't know if it's a trap from before, but let's say I took this. green bar. I probably wouldn't, but let's say I did, right? And I'm like aggressively trying to get it back up here, and it stops, and then it comes right back again here. If I take that and it stops, okay, that one worked. But if I take that and it stops, I'm just done buying this area. I'm gonna wait. Here, maybe this'll work. I mean, maybe this will stop. So if I take this one and it doesn't quite make it, and I get stopped, I get stopped right there, right? And then it comes right back in, and I take this, and this gets stopped right there. There we go, perfect. So there's a 2 in a row, right? I'm now done trading this area. I can physically leave the computer, and wait for my my thing to tell me that I've left, and I'm alerted with a bell when it leaves the area. And so now, once I leave the area, right, now I can reevaluate and start looking for trades again, right? Because we've left the area, and I do not expect choppy trading anymore. So now I can start looking for traps again. And so that one doesn't quite trap back in. Purple bar star works. Here's a trap. That one's good. And it works, and I make my money back, right? That's the idea anyway. So that's how I get around that personally. Is I just take 2 stops and I'm just done with it. It does mean that sometimes I miss it when it happens on the 3rd one. That does happen. I'm not saying it doesn't. It does happen. And I might have to quit for the day if that happens, because it's pretty frustrating. But you have to decide ahead of time how much you're willing to risk. That's really what it comes down to. Okay, so the long I took was at 7. So let's just skip ahead a bit. I just didn't trade this. I slept during this. 7 o'clock my time is 9 o'clock his time. But this was an interesting pre-market where we got that news on ECB and they just ripped and squeezed, right? And so right away you kind of had an idea that something might be a little fishy, right? And so I bought at 7.59, so 9.59. So I knew I kind of wanted to be bullish. Like I had the idea that like bulls are probably in control here. 7, 8, 9.59. So we got to go further. Took a while. I missed this. Are you strict on trap back in entries? I mean, they must bring you back inside Apex. I am. There are conditions. Okay, so the way I look at that, it's a great question, and it really is. It depends on your style and how aggressive you are. When we have good trading conditions, if the chart looks like this, I will be much more liberal with where I need to see it trap back into, right? If I'm getting like that bell right there is the sign that we've moved away from this position, by the way. So the market must be moving. But I like this. I will take, even if they printed one more bar here and then came back, I'll go ahead and take it, right? But if we're not doing that, like anything other than this, where we're going from one side of the channel to the other, like once it starts doing this, I try to be more conservative. I definitely don't always follow that rule, right? But like here, like this is a good one to skip because you're counter trend trading and you've got another bar. But the fact that this bar is purple makes it likely to work, right? So if this wasn't purple, if instead it was just a down bar, I think skipping this is totally fine. But when you have a purple bar to your left, it really is often an opportunity as long as you're going to take profits at like 10 to 12 points, right? And you're not trying to break this high. That's where people make mistakes, right? The algo is intended to scalp. It's not intended to tell you where the highs and the lows are broken. To get that, you're going to have to go to a higher time frame and get the setup there. But you can see on like the 40 tick, it did not set up as a trap here. It just looked bearish, right? So when the higher time frame looks bearish and you're trying to get bullish, you just got to get out up here. And like, so what I would do is I would measure ahead of time. Once I see this purple bar, I'm already thinking, and I see this, I'm already thinking, okay, I'll probably be getting long You know where the bar is going to close once this bar starts. I don't take purple bar star. But yes, you're right. I don't buy purple bar star in this situation. I'm not buying that. This. I do not buy this. We are, because volume's increasing to the downside. See that? And, well, okay, I might have taken it if it was a trap. This was a trap. I would have taken it. I would have taken that. Yeah, I'm wrong. If this wasn't here, I wouldn't, right? If it was just like big down wave, purple bar star, I will not take the first one, personally. It works a lot, but it doesn't work often enough for a big move for me to take all the 15-point stops that it does get. It probably works 60% of the time in that situation. And so, yeah, it stopped and it came right back in, and I probably would have taken that too. This one might get my risk off, but I think it just missed it. And so I would, in that case, I would not be able to take that. If I took both of these, I could not take this. Yeah, it really is. It's like you get and then the other thing you can look at is time. See how this was at 9 o'clock exactly. There was what's it called? There was econ that came out here. So when you have an econ release or a news event or a Fed speaker or something like that, and you get a response from that, in general, it's a good idea. Like at first, just don't immediately fight that. Assume the market is doing what it's doing for a reason, and like, yeah, like I just be like, if it's gonna fail, it's gonna fail in a situation like this, and it's just unfortunate in this case that it happened to line up with this that it happened to trap back in. If this wasn't purple, this would be a great time to skip this. But because of the way this set up, I probably end up taking it. I didn't. I don't think. Wait, did I? 7:59. I was, oh, that's right. Nope, I slept in today, and I probably got lucky. I was getting ready here. That's right. I had just sat down, and I remember thinking, well, this is the econ. I'm going to wait. That's right. So that's why I didn't end up taking this. I know a few people in the room did, and I just wasn't, I didn't have my broker up and stuff like that. I just wasn't ready. It took me like another little bit. So I woke up and was getting ready and listening, but not really trading like here. But I'm on Pacific time, so like that's really common for me just to kind of skip the open. Especially if there's Fed speakers and econ. I'll just skip it because I know I'm not going to trade it. So I'll just skip it. But my trade, yeah, but you're right. That would have been two stops. But and then I would have skipped this. If I would have taken this and this, I would have skipped this. But if you didn't take this one and you took this one, you kind of, in my opinion, you kind of have to take this. But your intention is basically just to get 10 to 12 points back. You're not trying to take that high. And I think that's where most people make the mistake, is they see the trap and they in their mind, they see it reversing. And the algo just doesn't have the power to do that. It's not able to tell us on this time frame what's going to happen on the higher time frames. We do have some tools that can give us a pretty good idea of whether or not there's pent up energy, but like you can look here, like if we did this, right, what to get a long that was strong, here's the high volume node, high volume area, right? What you'd have to do is develop volume above this, which happened, and then bounce here with a green bar or a star. So this star came too early. We had not yet developed volume above there by the time this star came. Doesn't mean you can't take it. It just means it's a scalp. But once we've developed volume up there, if we then bounce with a green bar, which didn't happen, it would have to happen right here. Then that can take the high. But once you've gotten volume below it again like this, now you have to start it all over again. Now you need to get a, say like this green bar is not an entry. And like I said, I only know that because of coaching with Simon. So if you don't understand that, like it's probably because you haven't been coached on it. But you have to have this. You have to do the sequence correct. You got to draw the DVP, get volume above the VPOC, and then see a bounce off of the VPOC, right? And a lot of people like miss one of those steps or just do them out of order, and they just think like next green bar I'm gonna buy it. right? But yes, also if I would have taken a stop here, I wouldn't be able to take it because it's still the same area. But I'm just saying it's actually the only trade that this is a trap. It is a trap back in to a purple bar. But the problem is that I know that this better setup, right? The VPOC setup tells me if I have any chance of getting back to the highs, basically. Because that VPOC setup will work when you're going to reverse. When it's not working, it failed here. It failed to trigger. I mean, it just didn't trigger. We didn't hold that VPOC, and instead we traded underneath it. So if I get in here, my target has to be the VPOC. Well, that's horrible risk reward, you know? Now I'm getting in a tick above this at like 95, and my target is 05. Like tops, I'm getting 9.75 points. So that's, and like I said, it's a nuance, right? It's like you have to be able to know that this is not the time to be taking any long. And the reason is because we had a high odds trade. Here, I'll draw the, in case someone, I see someone just joined us. So the high odds trade is the reversal. And we know that when the reversal works, there's a chance that this high might be vulnerable, right? It's the kind of trade that you want to hold runners on. It's not just a scalp. The trap back in, the purple bar start, those are really just built for mean reversion. So like when we say that they have like a 60% win rate, it means they get 12 to 15 points more often than they lose 12 to 15 points, right? It does not mean that they tend to, you do tend to see them at the lows and highs. But if you took every single one and held for 30 points, you won't do very well because most of them give you 12, you know? But so like this one like didn't give you, well, it stopped out, and then this one didn't give you much. But that's kind of what to expect in this sort of an environment, is a rip back to the midpoint, because you've gotten underneath the bar, the channel, and you're already back into it. So if this star was way down here, your risk reward back into the channel, a mean reversion trade, is pretty good. So it might be worth taking aggressively. But because of the location of this star, you just don't have very much risk reward, because the chances that you actually break this is poor, right? And how would I know that? Well, you'd draw the DVP, right? You'd figure out where the volume was, or look at how fast it went. But what I was showing down here is you can do the same thing here, because this is a new low, right? So I drew the DVP here. Here, I'll do it again. You drew the DVP here on this down wave to the low of this rotation, right? Or whatever, this down, this push down, this is a new low. So I drew the DVP, and then I'm going to mark the high volume area that's associated with the VPOC. You could just do the VPOC itself, but I like taking the whole high volume area. And what that tells me is to get this to reverse, what I need to do is establish volume above it and bounce off of that high volume area. Because just like with a bigger time frame, if you think about like if you know how to read like a profile, if you have a down day, right, and you make a new low, and then the very next day you trade up through the POC and you close up here, and then the next day, like right here, and then the very next day, if this was daily candles, the very next day you confirm this reversal with a stable balance day, and then over the portion of the next couple days, instead of going under the POC, you bounce off of it. Well, that's now what you've basically done is said that all of these prices down here are rejected. Nobody wants to be a seller down here. They only want to be a buyer up here. If that happens, now all of a sudden the whole situation changes, and you can get back to these purple bars. So my target would be here on that VPOC. That would be the target for that reversal. But when it fails, where instead of getting a bounce here, we just fall right through it, I don't want to have anything to do with longs until longs make something work. I need to see a trade work, because right now what I see is trades setting up and breaking, right? Or maybe making like 9 points and breaking.
And so like the last thing I'm thinking here is, wow, I want to be long because these longs aren't working, you know? So I might feel like I have to take this one because it's just a good trade. Like it works a lot. But if I did, it's for a scalp because I know these guys are most likely trapped, right? Their trade didn't work. So whoever bought up here is trapped. And that's why this VPOC gets a rejection here. That's why that happens. It's because they tried to aggressively buy and they got stuffed, right? So when we come back and give them a chance to get out at break even, they're going to take it. Now, what we don't know is whether or not they're going to bounce here. And so when they bounce off of that VPOC later on without getting volume below it, you can totally rip, right? It's like a head and shoulders kind of pattern. But when they get under it like this, I don't want to be a long now. And so now I'm just, what I should be doing is just ignoring these longs, right? If you're aware enough, that's what you want to do. The only reason you should be longing down here is if your target is back into this area. The idea that we're going to come all the way back up here right away it's just rare, you know. It just doesn't happen very often. And to do it, you need a really good trade. So my long was 7:59 Pacific, so that's 9:59. So I didn't even take this one. I didn't take this either, right? This was too much pressure for me to think about buying this. Because technically, I guess it's a trap back in here, but I didn't want to be a buyer. I didn't think I had risk reward. And then there's no power bar here. And now we're just going lower. So again, you could certainly draw the DVP again if you want. You could, what the heck? Oh, this one. You could draw the DVP again. And this time you were at the bottom, right? The high volume node is way down here. So now getting volume above that should not be that hard. Getting the VPOC above this is not that hard. And if you come back and bounce, it's good. Right? So this one actually worked because they got buyers to come up above the VPOC. But where did they get stuck? Right in the same area. So like if we had an algo here, it's not a bad buy, but it's technically not the way we're supposed to do things. But it makes sense that it would come back there again. So what I wanted to see was them pull it back into here, right? But I didn't get long until 84. Okay, so they must have come down a little further. So they wiggle around up there. Oh, they actually ripped. Wait a minute. Am I wrong? 7, 8, 9, 59. Nope, it must come back down. So it just started grinding. That's interesting. It just grinds up. How annoying. There's nothing to do here, by the way. Do not fight this. Do not fight this. This is not tradable to the short side. Like when you can't even get through this yellow line, do not touch this. Like we want to see this, right? That's when mean reversion works. The only way you can trade this is buying pullbacks, but I'm not gonna. That's yeah. It's not the style that we usually. This is nuts, right? Like Simon usually quits when this happens. If he sees this, he's like, I'm done. He wants nothing to do with it because it's so tempting to short this and this and it's so tempting. But like they're just like boop 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 boop. They're not going anywhere. The market's not rotating, right? It's just going straight up, but in like a grindy way. So these sellers are just going to get trapped over and over and over again. You just have to know that if it's not rotating, you can't take the trade. And yeah, if you're going to be an aggressive trader, maybe you take the first one, right? I don't blame somebody like for seeing this and thinking like it looks short, right? And like you sell this maybe for some reason and then like it traps back in up here. And if it came back in, I don't think that's wrong to sell. Like if this was an orange bar right there, I get it, right? Like I get that. that's just the kind of stop you're going to take. If you want to not take it, if you want to filter those out, what you have to identify is that there's lined up power bars. So see how these 3 power bars are all aligned? Yeah, for sure. Good idea. So we know it was at the low down here. We know it was at the low, but we should also be doing. Oh, is it the high? Ouch. Okay, that's tough. That's tough. So the way that we should be thinking about this is it's long if we can get volume above here and then come back in and bounce with an algo. So the only way we would really want to be short is if we could get under this stuff first and then retest it from below and drop. That's really where this gets to work. The hard part is that this one did line up with this. So I could see why you'd think that's a short, but you're measuring the wrong side. For the shorts, you need to measure off the highs and get volume under a high POC and then come back and retrace. Trying to flip it, you're going to get really confused if you try to short off the high volume nodes that develop off the lows or try to long off the only time that's going to work, Karam, is when your momentum is really high. What you're basically doing is you're shorting pullbacks, which is fine if it's bearish, right? But the question is this bearish? What bearish looks like is like the market getting under here and then not being able to get through the midpoint. That's what bearish looks like. That's when selling this works. Even if the DVP is down there. Here, let me see. Not there. Not there either. But yeah, if that DVP was like right here, that's where this works. If it's not continually bearish, if it's balanced at all, that's gonna fuck you over and over again, unfortunately. Okay, I'll show you here. Let me find a better one. That wasn't a good example. Let me find a better one because this is a really, really good question, or a good comment. I mean, that has taken me. I still fuck this up. I'll be honest. Like I don't always do this right. But if you notice that it is bullish or bearish, right? You need to. That's the only time when you can start taking the DVP trade in the opposite direction, right? Normally, the way this works, the DVP trade, how I was taught anyway, is that if you're working off of a high, you draw to the high and then you draw off the high, right? But the buy, what you're looking for here is an opportunity to sell a retrace. So, because it's a high. So what you'd want to see is volume getting developed underneath here, a retrace, and then failure with an algo signal. What I'm saying is that if it's bullish enough, you could technically take a buy in here as long as you've developed volume above it. So like if it bounced right here, you could try to use this as like a pullback, right? The problem is, I don't know, does that make sense? It's just a different way to think about it. That's probably not, it's not going to work very often. And that's what that's what you're trying to do here, is you're measuring the volume. Where were we? You're measuring the volume off the low. Yeah. You're measuring the volume off the low, and then you're looking for a short. Continuation, a buy of POC. Right. So the continuation trade only works if there's still momentum in the market. That's the only way that continuation pullback is going to work. If this let's say this is bearish, right? Let me find another one. Let's leave today and find another one that looks bullish. So like, doesn't matter which way we go, but let me just find one that might work. Like here, okay, this is bullish now, right? So if we identify this as bullish, and this is a new high, the way Simon teaches is the only way we can short is if we get volume underneath here, we come back up and we reject with an orange bar or a star. Okay? And that the only exception to that would be if we get a down wave here. Whoops, went too far. If we get a down wave that has a POC and then again, we get volume underneath, come back up and then short off of it. That's the way it's supposed to be done. If you're measuring a high, you're looking for a short at this level. You could draw that, right? You want to get volume below it, which happened right here, You want to see them come up and then reject, right? That's what you want to see. It just didn't happen here because it was still bullish, right? It's not the high. So that's the way that the original trade is supposed to work. What I think you're trying to do, and it does work as long as momentum stays in the market, is and I mentioned it earlier today, is that when the market was still open, is that once you've got this high volume node or high volume area identified, right, with a new high, if it's still bullish, what's going to happen is they're gonna establish volume above it, and then if they come back in and test it and give you a green bar, you can probably buy it, right? But the problem is if they start breaking power bars, it's not bearish. I mean, it's not bullish, right? If they broke this, it's not bullish anymore, right? So like the problem becomes when you've got the POC shows up down here and they break underneath this power bar, and then you try to get the bounce here, you're going to get stuffed a ton, right? And so the way that applies to today is the inverse. It looked bearish, right? And then we drew it to the low and off the low. But in this case, like this one kept you safe. It was at the low. You didn't have to worry about that. You knew only to buy off that. You wouldn't, you know what I mean? Like you're not going to short continuation off of this. The problem came when the POC off the low was at the highs. It gives you the illusion that you might be able to sell off that. And while you can for a scalp, if it happens immediately, your target is back into this high volume node down here. Tops. Because this is a scalp. This is not the trade we've been taught, right? Which is to go higher once you've established volume above these, right? So if anything, you should be buying this star, but it didn't really quite reach this high volume node. So technically it's not it's not exactly how we've been taught to do it, but like that's how we want it to look, is a pullback into that and then a bounce. But really we wanted to get volume above this first. But what you've done is you've reversed it and said, hey, if it's still bearish, we should continue here, right? And that's true as long as it's still bearish. The problem is they break. Now, you wouldn't know it here, but they're going to break above all of these power bars, right? And so now it's not bearish anymore, right? So you can't take, if they try to do it again, you don't want to keep taking that trade over and over again because you will keep losing. Once they've broken over this, because especially when it's a pack of them like this, where they're all lined up, like that is really dangerous. Because think about it, you've got a trap back in here, but you've got more liquidity up here. That's just acting like a magnet, trying to pull that price up there as soon as sellers stop selling, right? So this guy is really dangerous to sell because you've got these up here. Now, what I've done to keep me from doing that, what I've done is I've added lines to my power bars. 9, 7, 8. And that way I can see it. I see the liquidity. So on mine, 9, yeah, it's right here. On mine, you can see that I've got a lot of other signals, but you've got 1, 2, 3 red lines to get through. I would need a trap to break all of those. I don't want to take this because price wants to be there. Price wants to break these. That's just natural. They want to break these. So if think about it, my target, my stop goes right there. Right where the liquidity is, right where all the people who shorted this, right? Is their trade going very well? No. They're like praying. Yes, I can. Absolutely. Because we don't need them. And that's just volume. There we go. All right. So we've got, like I said, I've got some extra lines in here. But the ones I want you to see are the red ones. that extend off of power bars. I use sideways triangles for power bars just because it's a little easier for me to see. And I get confused by these triangles and I miss the power bar. So I've got extensions from every power bar. This one was from back here, right? And so the way to think about this is whoever got short on these bars that became power bars, their stops are basically at these red lines, right? And so when I get a signal to short this or to short this, and I see that I'm putting my stop right where their stop was, yet their trade, their short, is not working. Right? They shorted here. Maybe they're out already, right? But one way or another, I wouldn't want to be short still. Right? I'd be nervous. If I got short here and I didn't cover, I'm expecting to get stopped here. Like right here. I'm expecting to get stopped. Right? You're like 4 points from your stop at that point. And so even though it traps back into this power bar, these power bars are still sitting there like magnets waiting for price to hit them. Yeah. And you can find the exact same thing happened here. And like I said, it's harder to see on his because they came from way to the left. Way to the left. But what you'll see is that there were actually 2 more power bars. And this is why I've added the extended lines. And you can do it too if you want once you got... And what those are related to... Here, I'll put a red line there. They are related to... I don't know how long ago. The market remembers, though. Right there. From 8:30, from the open. And from the... So these lows down here were not yet broken. And they were within, like, firing distance of this. Right? This one got broken. But this one's sitting right there waiting to get hit. And I wouldn't see that if I wouldn't know that if I was looking at Simon's. I wouldn't know. Because there's no line there. Right? But I've learned that the traps work better when there aren't any power bars below you or above you. Like this this trap, I would skip. I'd miss this. Well, there's no purple bar anyway, but let's say it was. I would skip it because I've got a power bar right here, and I expect price to come back up there eventually. Yes. Nope. I consider power bars that were from within, as long as it's like within the session, I still consider them magnets because there's I mean, if you think about it, look at the chart, right? Like there's stops from yesterday here that got hit, right? So like these stops getting hit and then rolling over, that's still probably a pretty good trade. This one stops from the day before. We hit it. Did it happen immediately? No. But, did price keep going up? No. They ran into liquidity and rolled over. Like that's just the way it works, right? You just have to think about it on a higher time frame. Like they might not be relevant for like the immediate bar, but chances are we're not going to turn around until we clear this liquidity out. That's all I'm saying. Reason can be stops hitting and taking. Yeah, because remember the markets, like the algos that like run the market. This is my own opinion. The algos that run the market that like basically push price, like they obviously don't control the market, right? Like there's real human participants actually buying and selling. But when it comes to whether or not price jumps here or here, in my opinion, what makes that decision is other traders putting their liquidity, like whoever's willing to do business. If there are still traders willing to get long down here, or not get long, buy down here, they're not going to stop the auction here. They're gonna make their way lower until they run out of sellers, right? And so like they come down here and they fill these up. So now to get to the next power bar, they'd have to push all the way down here. If they don't have any sellers to get to that liquidity, we can't get there until later, right? So that's what pushes the market. Is it's how committed are sellers to collecting the liquidity that everyone knows is sitting down there from some previous pivot. right? Everyone knows anyone who got long here probably has their stop down there. So they know that if they can just get the market down there, it'll probably sweep those stops and they can get out of their short. But the question is how committed are they to get there? Well, this is a much bigger area. This is harder to do. But when it's this, like, if they were willing to sell this, they're probably willing to sell this just with the intention of getting that one. And they do, right? Less green lines means trap back up is more likely to work. Yes. Less green lines below you is because once you hit them, they disappear. See that? So like, if I've got an area where I don't have a lot of green lines, there's a good chance that we're going to get some kind of a relief rally or some kind of a mean reversion. And best case scenario, like here, I don't expect this one to hold, but this one might, right? And I certainly don't expect this one to hold because now it's got two sitting up here. So there's like double the liquidity up there, right? So when this one gets beat, like when this one traps, it immediately gets beat and they go for that liquidity. And so now they need a lot of buyers. Look, there's no sellers here, right? So if this one turned, chances are it might actually, this one has better chance to work because there's no sellers up here, but sellers just gave up, right? So like if you missed this one and took this one because it looked like a pretty good trap, like I said before, the only way you can get around that is by identifying that you've recently broken all of these power bars and they were lined up. And so the result, when you beat lined up power bars like this, like these clusters of red lines on mine are just power bars that are lined up, the result is a squeeze a lot, right? So it's like, it's two different pieces. You don't want a lot of lines behind you if you're going to if you're going to do the traps. Like the traps that work are like this one. Trapping that one might work, right? If there's nothing below there. That trap might work. Yeah, so this trap works. See that? That trap, I would say, works. It gets a reward from that. Whereas this one, if this trapped, I'd say it probably doesn't work, right? If this one went down, I probably wouldn't take it because there's this big cluster. The hard part is once you have a cluster, if you actually get through it, you're actually likely to squeeze. And so it's there's kind of two sides to that. I can find another one. Let me find another one that does that. So like this trap is harder for me to take because I've got this line up here. I know they're going to come get that, right? They're eventually going to come get that. So I might skip that trap because I know eventually they're going to come up there, right? And yeah, you'll miss some trades doing that, but like, okay, here's one where so see how this one doesn't work? The reason is because you stopped out all these guys. There's just no sellers left. All the sellers are hurting now, right? So it's like two sides to this. You don't want a lot of lines behind you to take the trap, but if you break through a ton of them, you might get a squeeze, and so you have to be kind of careful. So it's sort of it's a double-sided sword, right? And you will miss some of it. Like I might miss this because I want to wait for this one, right? I might miss that. And technically, I guess it's not a trap, but I would expect that these eventually get broken. And the hard part is that when they do, if they get broken all at once, like they did, like even that, right? I might expect this just to get like squeezed through here. See how now they got a big cluster of them? So I would think that this would squeeze. And I probably wouldn't be so, if they just rolled over right here, if this bar was bearish, I wouldn't even fuck with it because it's like they've got all this momentum. They're breaking through all these guys. Like they're going to stop selling eventually, right? That's the way I think about it. So when I see a big cluster of them all together, especially if they're lined up like this, I will hesitate on this one, right? But if it does work, like I'm fine continuing back and forth. But in general, I would say avoid them if there's one right behind you. That's where I save money, is like when this one gets broken and I see that there's literally one ticks behind it, exactly where I put my stop is a spot where I'd want to be short anyway. Like why should I buy where I want to be short? You know, But the only way to not short this is to identify that it's actually getting really bullish and there's just no more sellers. And you can't avoid every stop, right? Like some of them you're going to take. And if you really thought this was balanced or bearish, you might take it, right? You're not going to miss any of all of them. I didn't think it was bearish, and that was primarily because of what happened earlier and the fact that, like I said earlier on, I had identified at the low. Where was that? At the open. Where was the low? There was a spot I mentioned earlier where they pulled back, and I said it looked like they were holding it. Was it this? I think it was this. So I said this to me. Yeah. So this here looked pretty strong to me. They went down to this higher low and they put all the volume at the bottom and they ripped off of it, right? And so my thinking all the way back then was buyers might actually be trying to like develop something here, right? And so that's why I didn't short. Oh, I knew I didn't. We talked about why I didn't short that. The reason I didn't short this, this orange one, is because this higher low compared to the low, I think it was higher. Was it higher or lower? I think it was higher. Let me look at the candlestick chart. Higher, slightly higher low than the open. The volume was all at the bottom, right? And they established volume above that and like are rejecting lower prices. So like if it didn't work here, I don't know why it would get bearish. I mean, because look, this was a huge bear move off of like econ. Like if they're gonna sink it, they're gonna do it, in my opinion. But like when they get a low, they break all these power bars. This looks bearish, right? And like they just buy it. And so once I see this, I'm like, okay, this is the wave to the low, right? This is the wave to the low. If we can get above that, it didn't quite get an orthodox close above it until here. But I saw it as rejecting it. Now, once you got that orthodox close or a bar that does not have any contact with that wave to the low, do not be short. Look for pullbacks to buy because this pattern repeats over and over and over again once you get up there. It just missed it. But I saw this move off the low and it just didn't look bearish anymore. Like all the channels started to move up and they broke all of these and just bounced. I know I've got this one from the open, but all the rest of these got broken. Actually, I think this one was maybe it was a lower low. But they're I don't know where the low of the actual session was. Might have been here. But let me see. I'll figure it out. Open. It is 11,272. This was the low of the day. So when we got that of the regular trading hours. So when we got that low and I measured it and the volume was all at the lows and they developed volume above it, I'm already just assuming it's probably going to go higher. I just don't know how much higher because these are the kind of setups that tend to create reversals, and we just had this big bear move down that looked pretty convincing in real time. And we're like, we've been bearish overnight, or like, well, the night before I should say, and yet they're holding these compared to Globex. We've got higher lows, right? So these guys were all trapped in Globex in London, and we're now making a higher low compared to them. They put all the volume down here and bounced off of it. So I'm just interpreting it as we go as like, wow, this actually is a really big response off of that low. And so once they get this bar, orthodox close above that low, my only thinking is I should be buying here, right? That's the way I was thinking about it. So I didn't get, what I really wanted was a pullback right away. I wanted this line here to get tested, this POC off the low. I wanted that for a buy, right? Because now I see it's bullish. So what I wanted was a pullback that gets a bounce. It's not the like I said, it's not as good as getting it off this low, but it's you can think about it as like the higher of the two. Your best case scenario is to bounce off of that because that's the low, right? And so I didn't have anything to do all through here. I didn't touch this because it just looked bullish. I got pink back here to tell me to like lay off the shorts until they start working, right? The first short that worked was this. And so I almost took this. I did have a speed bar on it. I did have a trap trader candle. I could have taken that. I didn't. I just didn't want to start the day with a loss. And so I waited until 57, 59, and the price 9. Let's see, 8. Oh shit! No, we already did. Did I miss one? It's 8, 9, 10. No, it's 7:59 my time. 8, 9. So yeah, 59, and the price is 11,400. Right there. Okay, so this, I believe, 59. Yeah, is my first buy. Is that right? 400. Yep. And so then I stopped out on this right there at 84. This was a loss. Wow, they filled me at fucking 84. So they filled me at 84. I just took a loss. So yeah, no problem, Karam. I appreciate you hanging out. I'll leave this up if you want to watch it later. It'll be on YouTube. I use my own music in the beginning so they don't block it. I can make sure that things disappear on YouTube in about 2 to 3 days by putting like pop music in the beginning, and then they always block it. So I don't have to go back and delete them because they just block them in 2 days. But I use my own music today, so that this one will stay up. Anyway, yeah, I longed this, and the reason again was that this looked really bullish, and I just wanted to pull back at this point. Now I did this wrong. I saw this. I did exactly what Karam was just talking about, only in reverse, if I remember correctly. I measured the top, and I found that the volume was up here, right? So what I should have been doing is shorting off the top here. This one was the best, right? But you would have had to be right on time or early. And then the better one is this one. But there was I didn't have Simon's algo on here. It's triggering. It was only my own algo, which I don't trust to take alone. It's interesting that it fired there, and I will definitely look into seeing if that yellow and blue arrow might be good enough. But yeah, that would have been the short right there. Technically, this would have been the short, actually. How did I miss that? Oh, it was during the wave off the low. So, yeah, either one of these is totally fine, the star or this star with the orange bar and stuff. These are good entries, and you can see they did not stop out. I just didn't take them. And so when I missed that, my thinking was I want a long. And so what I should have done is waited for a trap. That's the right way to do it, right? But instead, my thinking was it's bullish. I've already identified that it looks pretty bullish on the from the morning, and that they're eventually going to find a spot to bounce here. And so what I did was a little bit sketchy. I took what did I do? I took this green here, but it wasn't really a great trade because the way I was thinking about it, did I draw it from this? Yeah, I think what I did, I drew it from here, I thought. Wow, it's way up here. For some reason, I thought it was down here. Maybe this might have just been an off-process trade, you guys. I might have just fucked this up straight up. Because what I thought I did was I thought I had a POC down here, and I was trying to bounce it. But the POC was at the high. So I might have just fucked this up straight up. Like I actually don't know why I would have bought that. That's not a trap. It's not, I might have just been buying dips basically, which sucks. Because that's not what I'm supposed to do. So that's a little embarrassing. I think that's probably why it stopped. I don't know what I might have done wrong there. I might have just, you know what I might have done? I wonder if I drew it wrong. I wonder if I drew it up here. I think I know what I did. I didn't extend it. I bet you anything, I drew it early and stopped right here. That's what I did. Oh, that fucking sucks. Okay, so we have to be very careful. That's what I did. So what you're supposed to do is draw to the high, right? Well, at this point, I was anxious to get a short and saw this down bar and was wondering if I could take it. And I was like, let's draw to see where the POC was. And it was right here. And so I marked it, I'm sure. I erased the lines plenty of times since then. I marked it, and then I didn't extend this another couple bars when it went higher, even though I should have. And so what I'm supposed to do is wait for volume to get underneath the high, wait for it to retest, and then go lower. Luckily, I didn't short this, because that would have been really bad, right? But technically, that's what I should have done. But instead, I was like, hey, I wonder if I can buy there. It kind of looks like a good spot to buy, and it's interacting with all this volume. I'll buy it. And it stopped. But the reason is because I didn't draw it right. I didn't extend this to the high, which I could have easily done just by doing the drawing on the wave. And that would have shown me that actually all the volume was on the high, making this and this a perfect sell, right? And this a ridiculous sell, right? And also this a bad buy because the highest I should expect to get was right here, which is like where we're at. So I did not buy it. I stuck to my guns and went ahead and bought this, thinking we're still, stabilizing here. And like I said, in retrospect, seeing how this actually set up, the only way that this could be meaningful and on process buy is if it interacted with this one. And I guess this one did too. But I didn't draw this. I wouldn't have been able to draw this until we got some sort of a bounce. So I'm thinking that this was actually not a very good trade. It's just triangle down green bar. It's not an A plus trade. And this one's actually like straight up bad, right? So that loss was unfortunate. My next one was, 8 o'clock. So right here at the hour. Oh, and then that's the other thing. I shouldn't even be trading here because we try not to trade in the last 10 minutes of the day. That's when all the time-based algos go off. So it's generally a good time to avoid. And trading right at 10 o'clock is usually not a good idea either. So I might have just kind of lucked out there, you guys, that worked. My fill was 11,400. So, oh no, that's on the first one. So no, 11,397. So I got long right when this closed, right there. And then my exits were, like I said, it's a little bit sketchy. It basically is just a triangle down green bar at the bottom of the channel. So this will work as long as it's bullish. It's not a high odds trade. It's a three bar setup with a purple bar, and it's got a triangle down green bar. It does work. I'm not saying it doesn't work. I mean, even purple bar green bar by itself works pretty good as long as it's bullish, right? But if I think it's balanced, I have to be a little careful with taking those because they don't work constantly. And I've got this green line right down here. And it's very often going to come down here and sweep up that liquidity first. So I really do need to be careful there. And like I said, I'm kind of lucky that this even worked. But my exit, it looks like, which I didn't realize, 11,406. Because like I said, when I did the review, I still had all these drawn and it looked good. But so my first exit is 06 even. So that little that's a very small, oh no, yeah, it's 9 points. Okay, so that must have been on a retrace. And then my primary was 11,409. That makes sense, right? So my primary is here. When this hits, it takes me out, right? My secondary is as it's pulling back, I exit. Which that does not surprise me that it would immediately like shift back, right? And then I got my last one off. I held it, and I got my last one off at 21. Right, so I held it till here, and did it keep going? No. Okay, so yeah, so that was a little bit of a sketchy trade. It's not that it's not on process. It is. It's just an aggressive trade. Triangle down green bar is a trade I can take. I'm just not supposed to take it in the Apex account. My coach and I agreed that I should only take A+ setups in the Apex account. With a cash account, or like a account that I'm like not worried about blowing up, I can take these and like manage size. But right now I'm trying to qualify these accounts, so I'm just taking like as big of a size as I'm comfortable with, and try to only take A plus setups. So that was just an error on my part, and it's good that it cost me a stop, because that you want your errors not to work out very well, but it ended up paying me in the end, so that's okay. So then I bought again at 8:43. So that's 10:43 Central. So I did not short this, even though it is a trap back in. You can probably guess why, because we had this apex so close. So I was gonna wait and see if they take that out, and they just didn't, right? And so that's one reason why you might not want to make that rule that I mentioned to Karam, is you are going to miss some trades, right? If it truly is balanced and they just don't sweep that liquidity, you will miss those trades. So it's like, oh, well. But for me, that's okay. They probably eventually come up and get that. Yeah, right there. So now they collect that liquidity. It just was late. And then they run again, right? I'm not shorting now because it's bullish. So I'm not going to catch this unless I draw the DVP and it works out. But my next long is 10:43. So I waited for the pullback, which is good. That's what I'm supposed to do right here. And I got, here, let me just erase some of these lines. So I got a trap back in trade. So we put in a POC, right? And now this one here did have that one to contend with. And I was just willing to do it because I was trading with the direction of the trend. So in this case, even though it was only ticks away, when I got the speed bar and the arrow, especially after a bright purple bar, and it's a trap, with a purple bar 2 from behind, or in my case a purple background 2 from behind is okay too. I'm going to take this as long as it's going in the direction of the trend. I'm not going to take this exact same trade going bearish on a day like this. But my entry here was 8 at 11, 421 again. So that's where I exited before, and I got right back in here. And then my first exit for 3 was 11, 430. All right, so I got a nice 11 points. Oh no, 9 points is what I ended up getting again. And then my primary exit, so that must have been a pullback. Primary exit was 11, 434. And that's my 12 points. So I got my 12 points, and I must have gotten a pullback. So right here, I got my 12 points, and then they started pulling back, and I ended up like panicking out at that wick, which sucks. Now I still had 2 points, 2 contracts, which got out at 40. Now Simon took this trade too, at the as the trap back in, and he got out right away. I actually wanted to hold this. I intended to hold this. I had a voodoo range level at 43, and I intended to hold this as long as I could, but Simon was like talking about how he would sell, and we did break this high. And so when we came up here, and this actually took a long time, and it started coming back, and then it started, it paused here for a while, and it had touched the voodoo range level and settled. And so I got out there, but it continued. And if I remember right, Karam actually held that for a while, so that's kind of cool. That was a beautiful trade, and like I said, it's a A plus trap, right? And it yeah, that's good. So that's that one. And then my last, and that, like I said, I only had one more trade. Was that right? 159. Yep, my last trade was also, wow, all of these are longs except for the first one. My last long was at 9:43, so 11:43. Okay, so we get a big rip up. I'm not selling these unless I have a DVP trade. And so the trade here, you would have to get volume below, come back up, and then short it. But the problem is this DVP to the volume off the low was down here. Oof. Wow, I'm kind of surprised I didn't get caught in that. I guess I just didn't think it was that bearish, because this actually looks like a trade I might have taken. That's interesting that I didn't. I'm kind of surprised I didn't take that, because that kind of looks like a reversal. And that's exactly the sort of trades that I tend to get caught in. Somehow I missed that. I don't know if I was like chatting or in the bathroom or what, how I missed that short. But what I ended up taking was 43. Oh, okay, so I took the long. Ah, I see what I did. So I looked at that same exact thing. I see what I did. And I didn't see this as bearish. I measured these. And I said, that even though this is the high, right, of the day, that looking at the chart, that I thought that this was bearish and this was a pretty good pullback, and that if you look here, we had a low volume node here, and then that became a high volume node. So what I said was, if buyers hold the high volume node, and I get a algo signal here, I will go ahead and buy it. So I bought this as a trap. See that? So it made a low with a power bar, it went under, and then it trapped back in with a green bar. I knew I did not want to short at all. I only wanted to be long, and that was my first. It was very similar to this, very similar to this, right? Where I get a pullback into a high volume node, a trap, and a long to go with the trend, because it's a trend day, and this is the only way I usually trade trend days is with pullbacks. So here I got long 69.75, and then I got out 3 at 78. Okay, so I held it up here. So I must have held it, and then they didn't hit my target, and they started coming back, and so I exited, and then I got out of the rest. Oh, I see. So I got out of the rest at 79. So basically, I just didn't hit my target. How did I not hit this? Is this 79? How did I not hit 83? I panicked out of it. Interesting. So I panicked out of it. All right. I wonder why. Why did I panic out of this trade? Now I'm confused. I must have just seen that it was getting to this gray area, and didn't trust that it was going to go very much higher. I do have a low volume node here with the purple bars. Interesting. See, the problem is I got out at 78 and 79. I did not hold for 83. I got out here. I'm pretty sure where I got out was this wick here. But I guess I just saw it do this. I don't know why I didn't have my order in. That's what I don't understand. I should have gotten filled at 83, unless I accidentally put my limit order way up here. But I shouldn't have. I should have gotten filled at 83. And then panicking out of the rest of it's fine, because as you see, it actually does roll, right? And then the rest of the day continued long. So, I mean, you really didn't have any opportunity. Like here, it's set up in the exact same spot again. I wish I would have taken that. I watched it, and then it just blasted off, right? So, and I'm not going to trade the close, even though this actually set up really well. As we said at the close at the beginning of this video, when we rejected this and trapped him, and then retraced, I thought that this was probably the short, but I wanted it to come back up here to get short. It just didn't happen. So that's that. I'm gonna cut this here, because that's what I said I would do, is just review all of my fills, and that was that. So that, like, as you can see, it's not perfect. I do my best, but I'm not going to be 100% perfect. I did have a pretty good win rate, but it looks like I lucked out a little bit, because one of my good trades was not an A+ trade, even though it was on process. But I'm glad to see that my one stop was actually an off process mistake, right? So had I just taken on process trades, what I would have done is not taken those, and I would have been continuing to trade, and I would have caught this, right? Because I wouldn't have quit, and I would have gotten that. So it's interesting that sometimes taking more trades, especially if you're getting tired and you don't take a break and come back, and instead you just keep trading. I could have easily given back my gains today, right, with those off-process trades, but thankfully I was trading with the trend, so I sort of got lucky, I think, with that one working out. And then the next one, I just was a little bit aggressive since it was a trend day, and I don't think that's horrible. But interestingly, had I just waited for the better entry, I would have gotten it, right? So it's a good place to see that. Good way to see that the name of the game really is just to wait for those A+ setups, and to distinguish which ones are going to take where. And in a trend day, taking shorts in general is not going to work very often. So anybody who just kind of